What is good, NIO family? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only NIO stock and what you should be looking after for the future. I'm also going to be talking about what's going on with the CPI report that just came out and how this will affect the overall markets, the Fed, and NIO going forward. I'm also going to talk about what Elon Musk, the man, the myth, the legend Elon Musk, has been tweeting about, as he has some very important tweets for the economy, the EV sector that will affect the market and NIO in a very, very big manner. Now, before I say anything about what Elon Musk said about the economy, that's huge for NIO. Before I talk about what's going on with the share price and the CPI data, I do have to mention some very important things first. Firstly, as you know, I'm not a financial planner. Do not take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire NIO community as a whole. And the last things, if you guys can, please check out the Webull link down below and in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you could always sell these 6 free stocks for cash and use that cash to buy some NIO shares for free in this limited time offer that ends in just 2 weeks. So please check it out before they run out. With that out of the way, let's get on with the video. So looking at NIO, at the time I'm recording this, we're down about 4.5%. Now, I am recording this during the market hours because I will be unavailable to record after. So I want to talk about what's going on with NIO because today was a huge day for the markets and we could see red almost all over the place. There's a lot of red right now. And that's because of what just ended up being announced. So if we actually go back here, CPI came out at 8.6%. I know CPI could be biased, but core inflation excluding food and energy rose 6%. And CPI is reported at 8.6%. So obviously the data could be kind of manipulated, but we still have to go with this data because this is the data we have and this is what the data uses. So this is the highest rate we've seen since 1981. Inflation rose once again 8.6% for the month of May. That's crazy. Now, why is this so important for NIO? Why is this so important for the markets? Well, if we time travel back in time, we were talking about how the Fed was addressing inflation by kind of tightening on their policy with quantitative easing, and also by raising the federal funds rates, by raising rates so that they slow down the economy. They essentially slow everything down and bring inflation down. And what's happening is initially it was supposed to be stated that inflation hit its peak like 2 months ago and it should have been going down. However, we're at the highest we've seen all year. This is the highest rate we've seen for the entire year. It's not working. So this is very important for the markets. Now, what does this mean for, NIO and the overall stock market? Well, when the market dropped, the market was pricing in 50 basis point rate hikes for the next couple of months. So if I actually show you this right here, so we kind of expect that 50 basis point rate hike here and for September. So for the next couple of months, we're expecting 50 basis points. Now, the problem is, and there's an issue, inflation keeps on soaring. So there's a possibility the Fed may have to become more hawkish and the Fed may have to raise rates at a faster rate. So we may get a 75 basis point rate hike in there. If you look at this right here, this is the estimate for rate hikes by a certain period of time. In total, by December 14th, 2022, by the end of this year, before there was a 36% chance we would end the year with a 2.5 to 2.75% rate hike, right? And then there was a 36% chance before, now it's only a 4% chance that's actually going to be that low. Before there was a 45% chance we would see a 2.75 to 3% rate hike. Now it's at 21%. And you could see before there was a 16% chance we would see a 3 to 3.25% rate hike. Now it's at 36%. So if you look at the current probabilities, currently there's a smaller probability we're going to end up with a 2.5 to 2.75% total rate hike by December. And now there's a 21% chance it's going to be 2.75 to 3, and a 36% chance it's going to be 3 to 3.25. So there's a higher probability now that we're going to see a more hawkish Fed because inflation is just going through the roofs. And right here, you could see the probabilities that changed. So right now that's not necessarily a great sign for the markets. I have to be as blunt as possible, as honest as possible. We may end up seeing these hikes even higher than a lot of people would have anticipated. Now, why is this big for the markets? The answer is the markets priced in, right, the 50 basis point rate hikes already, but they didn't really price in that 75 basis point rate hikes, or even higher probabilities that the hikes will be higher. That means that there could be a lot more potential downside for the markets. And if you don't believe me when it comes to that 75 basis point rate hike, that's a possibility. Elon Musk just tweeted this. This is just a joke. It's supposed to be funny. So I know the language is kind of colloquial, but just hear me out. This meme right here, it states that on God, 8 years of 0% rates was bussin', but inflation is mid, so we need hikes, 75 basis points, no cap for real. That's pretty funny in my opinion, especially when they said 0% rates were bussin'. But anyways, we need a hike 75 basis points. Okay, this is what this said. Elon Musk responded, real talk. So obviously, the man likes to joke around. He's a funny person. It could be comical sometimes, but there's truth behind this. Elon Musk is telling us we need a 75 basis point rate hike, which the market hasn't fully priced in just yet, in my opinion. So this is essentially letting us know that there could be some more downside for the markets in the next upcoming months. And this is why this CPI report was so important. It showed us where we are right now. Was inflation going down? Was the Fed's policies working? It looks like it's not working as well as it should have been. They have to get stricter. They really need to get on this as soon as possible, or else it's going to take off. It's not going to be good for individuals, working class Americans, for our entire economy. Things need to be done. Now, another thing that's important is Elon Musk made this prediction, right? He stated that when asked, excuse me, when asked the question, when do you think the next recession will be? And Musk responded, predicting macroeconomics is challenging to say the least. My gut feel is maybe around spring or summer 2022, but no later than 2023. So Musk may believe that we're in a recession. He also stated that he has a super bad feeling about the economy just about a week ago. So it goes to show, I really don't like to say this, but downside may be imminent for the markets. I'm not saying it has to start just immediately, because we have the Fed meeting and the PPI data coming out between the 14th and the 15th of June. Right here, this is the next Fed meeting. So the market is going to just be kind of on the edge waiting for what Jerome Powell does. If he gives us a 25 basis point rate hike, that would be crazy, extremely unlikely. The market would rally if that was the case. If it's a 50 basis point rate hike, then the market would probably stagnate and maybe drop a little bit. And then if it's a 75 basis point rate hike, we're going to get rug pulled hard. So just putting it out there, right now, downside seems a little more imminent. NIO does have this gap that's going to eventually get filled up, which shows it will recover. But we also have these gaps down that will take NIO back to that 16 range relatively soon. So right now, I think NIO is going to fluctuate in this range. But I do think that if Powell ends up speaking and we get another rate hike, if the market starts to kind of downward trend a little bit, NIO could be heading to that $16 level at 16.5 or even a little lower than that. So I just wanted to put that out there. Now, when it comes to NIO, remember, this may be one of the, if this thing does drop down really hard again in the future in the next few months, don't worry. That may be one of the last major dips we see. Okay? And if that's the case, that's a very, very good buying opportunity, in my opinion. So don't look at this as a curse, it's a blessing. It's a learning opportunity if you want to learn how to trade. It's a learning opportunity to get better at understanding NIO. It's a very good opportunity to buy shares for cheap. So like I said before, the company is bright, its future is incredible. It just needs time. If you give it the time it needs, it will make one hell of a comeback, in my opinion. They're expanding all over the world. So, this is a very good buying opportunity that will come, in my opinion. So, I want to thank you all for listening. Please have a fantastic rest of the day. And just know, short term, yes, there could be downside. Long term, I'm still incredibly bullish. I do see NIO breaking past 3 digits within the next 2 years. I'm very bullish. I see this thing soaring to the moon. They're going to be expanding to many countries all over the world, and I'm just very excited for the future, and I look at this as an opportunity. Thank you, NIO to the moon, and peace out.